Mark Mahaney is here. He's head of internet research at Evercore ISI. So it's the retail business. It's not about the cloud today, Mark.
Not today. It's about the retail business. It's about Prime. I think this is the 11th annual Prime Day, and it's a 4-day extravaganza, as you mentioned. Kelly, there's some good savings, at least that I've seen. You can get $50 off that Aura ring and $100 off that Weber grill, so you can know how you feel when you're grilling. There's a lot of savings there.
I know how I feel
important...
when I'm grilling. I know the temperature is definitely up for both me and the grill during those periods.
So look, the retail business is important for Amazon. It's a necessary condition. I think for the stock to really outperform, though, it will be the cloud business. You need to see acceleration in that in the back half of the year. I think we're going to see that. If we're wrong on that, the stock's not going to outperform from here. The retail business also needs to show this continued expansion in margins. And I know we've sort of waxed off and on, and now we're off about tariff risk, but it's still there. Mm-hmm. And Amazon's kind of the canary in the coal mine. Shoot, they may be the whole coal mine. I mean, they're going to give us a read into, and we're going to be tracking pricing for prices on products on Amazon, and not these 4 days, but as we go through the back half of the year, and there is risk here. So I expect that to show up in Amazon's commentary about the back half.
Do you make much, Mark? This report from the first 4 hours from Momentum Commerce said that sales were down 14% from last year. I mean, is it a data point that tells you enthusiasm is waning? Does it matter if that's correct, or is it just too early?
Well, I don't know how good the data point is. I'm going to give them the benefit of the doubt. For now, I think we'll get a lot of data points in the next 4 days. I think since you're spreading it over 4 days, I would think that the overall sales is going to be up, solidly high single digits, low double digits year over year. Probably a little bit faster. Maybe it's more like 20% versus the kind of 10% growth that Amazon's retail sales is growing. So, yeah, it sounds like it may be off to a slow start. There are 4 days, however, here, and it's Amazon, and you're going to get a lot of promotions on there. I would expect this to do relatively well for the company.
Quickly on tariffs, we just asked this question to the Commerce Secretary, but don't you find it a bit odd that even as we're going back to all these tariff levels from Liberation Day, I guess in some way, shape, or form, the market's kind of not reacting, and we're not seeing anything like the concern that we were back then? Is it just going to be delayed? Is it because the nature of these tariffs is going to be very different this time? What do you make of that?
I just think there's been a lot of uncertainty since Liberation Day. And yes, I think the panic has come out of the market. I don't think we have settled tariff policies yet. So, we could still see a spike in prices across a broad number of items that are sold on mass retailers like Walmart, Home Depot, and Amazon. And all of these companies now are very sophisticated with their supply chains. And my guess is that they're going to be able to hedge some of those costs. I think smaller retailers are going to have a much harder time hedging some of those costs if they go up. Look, 10, 20, 30%, those are big increases. Retail is a thin margin business. Mm-hmm. So if you're going to increase your cost of inputs, that's going to be passed along, and those companies can only eat so much of that. Consumers are going to have to eat some of this. So we're still in a wait and see mode. But this is more risk than we had a year ago. There's more price risk here than we had a year ago.
But as you say, Amazon, kind of doing quite well in this survey. You have an outperform a 280 price target. Yes. I also thought it was interesting that a record high number of respondents reported using ride sharing in the past year, one of your reasons for being bullish on Uber. And as prices have gone up in its post-VC era, it's surprising, but look at the stock, it's at all-time highs.
It's up 60%. I think it's one of the 2 best performing stocks that I cover year to date. Now, it also helps that it started off with this massive robotaxi roadkill overhang at the beginning of the year, which successful launches of Waymo on Uber in Austin and now in Atlanta have really kind of helped address. But, the Uber, in order to go materially higher, and I think it can, I think it's still cheap relative to its growth rate. I know it's up 50, 60%, but this is still one of my top 3 picks. And that's because, you go 25 times free cash flow. I think this company can grow its free cash flow at that level or higher. So I think it's a very reasonable multiple. That still gets you to 115, 120. I think there's still a lot of upside to the stock. I like